is from a poll that we took in September of more than 30 individuals at the international level. We asked what aspects of their 2024 plans they felt most uncertain about. It was pretty clear is that the uncertainty was focused in areas around revenue growth, demand assumptions, pricing strategy. These are the things that are keeping senior executives up at night. And the reason that this is probably more of an issue right now, particularly in Asia Pacific, than it's been in the past, is because there is so much volatility in the market. This is a polling result drawn from an executive roundtable that we held just last week in Singapore, in which we had more than 20 executives in the live and virtual room. And we asked them about their views in regards to next year. How volatile will the business environment be next year relative to this year? And as you can see from these results, basically, we're expecting more of the same, or in the majority of cases, executives responded more volatility, which is a pretty remarkable finding if you think about just how volatile 2023 has been. Now, executives have a variety of levers to pull as they navigate volatility, as they build their business in this environment. And so within the context of this market volatility, we also asked in the same event how these executives intend to drive top-line growth next year. Are they thinking about volumes? Are they thinking about price? Are they thinking about some other tactics that they might use to juice growth in one or both? And it was pretty interesting, actually, what we saw. I wanted to share this right up front because it gives you a sense of why we structured the presentation the way we did and what we intend to talk about. Executives are really focused in this upcoming year on driving organic growth in existing markets and products, as well as introducing new products that will allow them to tap into additional segments, additional markets, perhaps complementary areas that will ultimately allow them to drive more volumes, probably change their pricing structure a bit as well. Executives are actively thinking right now about ways that they can basically juice growth, drive revenues in these uncertain times. And so what we want to do over the course of the day today is really give key inputs into these decisions. Where might you drive organic volume growth? Where might you introduce new products to the greatest effect? And we'll also offer some insights into other areas that are of interest to executives as well. Among them, how to think about pricing, how to think about some different factors which are going to ultimately impact M&A opportunities and others. So how are we going to do that? Well, we're going to step out and look at things from a very broad level. What's going on in Asia Pacific is not exclusively being driven by domestic drivers or even regional drivers. A lot of what's happening right now is being driven by drivers at the global level. And so we want to talk a little bit about Asia Pacific in the global context, offer you that perspective to lay a foundational plank for our APAC outlook. But that won't be enough because we also need to talk specifically about what's going on in China. Not only because China is such a critical market within the APAC portfolio, but also because what happens in China doesn't stay in China. It's also going to be a key plank for our Asia Pacific outlook for 2024. Once we've shared our perspectives on the global economy, on China specifically, then we can bring it all together into a perspective on Asia Pacific as a portfolio in 2024 and give you insight into what's happening on a range of fronts, growth, currencies, interest rates, and critically, how to think about pricing within that context. It's a lot to get through, but as Millen said, please don't hesitate to stop us, ask us questions along the way if something piques your interest. Now, having given you a sense of where we're going, a roadmap, if you will, I'd like to actually tell you what you can expect to take away from this presentation. So, some points to consider and suggested actions. First of all, we're not going to see a substantial uptick in global growth next year because inflationary pressures are going to remain strong and major central banks are going to keep interest rates high. What does this mean? Well, for regional executives, what this means is that headquarters is going to maintain or even increase its focus on ROI, return on investment. Think about things through the lens of equity market investing. Value investments are going to be more compelling than growth investments. Investments that are going to pay dividends right up front, real fast, are going to be a lot more interesting than investments that are going to take years to pay off, that really require some vision to get excited about. Also, it's going to be important, particularly in Asia Pacific, to prepare for lackluster export demand, particularly for high-value capital goods and consumer durables. In China, we've seen a profound change in the business environment because the political priorities at the top have changed. The country has basically entered an era of heightened unpredictability in terms of policymaking and heightened uncertainty in terms of economic growth. What does that mean? It means you need to use scenario planning for China. This isn't just for your own purposes. This is also for internal communications. You need to be able to set realistic expectations with corporate and then adjust your plans quickly as and when the market shifts, and probably will over the course of the coming quarters. Also, even an upside scenario, we'll get into this in a bit, but an upside scenario where China pumps stimulus into the economy and gets like juices growth, it's not going to be like it was before. It's not going to be smooth and easy where life is good as stimulus lays out the red carpet. You need to prepare for turbulence, even in that situation, because local government's debt constraints, as well as feedback loops in the property market, are going to make national policies effects uneven in terms of impact and time. Finally, much as I hate to say this, managing the APAC portfolio is going to be especially challenging next year because market dynamics are diverging a lot more than usual. And most customers are exhibiting heightened levels of price sensitivity, albeit at different levels depending on which segment you look at. Okay, talk about complexity. Can you give me anything, you might think, that is simple? Well, you can expect India and many ASEAN markets to exhibit more robust growth than East Asian markets. That's the simplified version. But that's not the full perspective. You need to look beyond that. You need to segment your customers with more care than usual, determine where you should focus your commercial efforts and where you can increase prices without sacrificing market share.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.